Yo, what's good, guys? Deep Self-X here again, and in this video, we'll be talking about psychological or key levels in the forex market. Yep. So first thing first, what are psychological levels? So guys, I like to keep things very simple. So I'll just give you guys like basic definition of psychological levels. So basically, psychological levels are levels that have significant effect in the forex market, and these levels are denoted or identified by round numbers and frequently act as support and resistance levels. These psychological levels in the forex market are like levels that have significant impact in the market, and they are mostly random numbers. So round numbers like maybe probably 1.0000 or 1.20000 and the likes. Most times, these levels serve as support and resistance levels in the forex market. Yeah, so with my years of experience in the forex market, I've come to realize that these psychological levels are basically levels that are like the sweet spot for banks and other big financial institutions, because like most banks would like be cramming numbers that are not like we'll be giving them headache. So numbers like probably 1.210, 1.37, blah blah stuff. So these numbers they be like out for banks. Like nobody has time to cram those kind of numbers. So that's why they stick with random numbers that are easy for them to identify and study in the forex market. Yeah, so here on my trading view, guys, I have GBP here on the chart. So I'll be trying to identify the major psychological levels in the recent chart here. So basically, how do you identify those psychological levels? So all you have to do is just take your horizontal line, and right here I can see that price rejected this level right here. Yeah, so I think it's 1.19500. So mark it, then just set the coordinates. So 1 point. So right here we have 1.19500, right? So just 1.19500. Enter. Yeah. So okay. So right here we have one psychological level already, and then I think here there's another psychological level. Yeah. So another psychological level here is 1.20500. So take your horizontal line again and just mark it out 1.20500. Yeah, so there you have it. Let me set it again. So just keep the figures very round. So 500. So okay. Yeah. So let's go to the resistance zone. So let's see. I think we have a 1.20. Yeah. So settings 200. So enter. Yeah. So what I basically do after identifying this zone, just take your rectangle tool and just mark them. Just make them so they'll be more noticeable. So just mark them. Take my rectangle tool again. Mark them. Yeah. So they can be more noticeable when you're actually trading with them. So let's go down to the 30 minutes or the 15 minutes to actually see how these psychological levels played out in the first market. So as you can see here, price got to this level, this support level, and then we tested this basic psychological level multiple times before heading towards the upside. The price initially came here too and rejected this zone, this 1.200 zone before heading back down again. And there's a strong possibility that when price comes back here to this zone right here, this 1.20500 that we've marked out, there's a strong possibility that price will either reject the same zone and continue going up again. So yeah, so there you have it, guys. As you can see here, too, price also came here to this 1.20220 level, rejected the zone, head back down. So these major psychological levels are just respected in the forex market, and that is why like every trader needs to identify them. So I avoid marking out plenty of the psychological levels because I initially don't want my charts to like too clustered or jump out, because I actually like seeing the charts because I trade basic price action. So I actually like making my charts look clean. I don't want any cluster or something of distraction. But many traders also mark out other psychological levels. Like you see some traders like with plenty of lines here. And for the sake of this video, I'll just try to do it very quickly. So you can also mark out some points. So I can see other psychological levels like 1.2100 right here, 1.100 right here. Um, Another psychological level. Okay, I think yeah to 1.20500. I think it will be around 1.0. We already marked that out. So I think yeah. So 1.200,000. So yeah, there's another one to write here. Zero, zero. Yeah. Yeah. So this is just basically it, guys. We can just continue marking them out, identifying them in the market, and just basically know that when price gets to these points, like there are major moves in the market when price actually gets to this point. So just make sure you identify them, know them. So keep them in your head. It's not compulsory. It's not compulsory that you actually mark them out, like mark all of them out. Just make sure you like mark the key levels, the ones that are very important, and that you see them major price movements in the previous chart. So just make sure you mark those ones out. You can actually keep these ones in your head. If you don't want your charts too clustered, if you just want a clean chart, just make sure you like keep them in your head and the rest. So basically that's just simply the way that you just identify these psychological levels in the forex market. Like there's no big deal in psychological levels. All you just have to do is just make sure you put them in your head while trading the forex market, and to just improve your trading skill and just know actually what to do when price gets to these kind of levels in the market. Yeah, so thank you for watching, guys. Hope I didn't take too much of your time. And if you like this video, don't forget to give me a thumbs up so this video can be referred to other people that also need it. Don't forget to subscribe to my channel, and check out my other videos too. They are very informative. And I'll see you guys in the next one. Peace.